Welcome to another tutorial video. We're going to go through what I call financial modeling best practices here, or how to give your Excel files a makeover. Now, this is a higher level tutorial where we're going to zoom out a little bit and talk about common mistakes in financial model setup, mechanics, and formatting. We're not going to talk about the specific numerical assumptions or whether the cash or debt or cash flow numbers are correct. Instead, it's going to focus strictly on the logistics of this process. So although it was very difficult for me to do, I've created a bad model and then a makeover or made over model with all the fixes applied. You can find them by clicking below the video. You can see the bad model here. You'll notice that it is split into 3 separate tabs and has a number of mistakes. And then the fixed model here has everything on one tab and is much more organized. A lot of this is applicable to internships and jobs, but I think it is also important for case studies because time is essential there. If you set up your model incorrectly, you're going to waste a lot of time on fixes, edits, and other problems, and not getting the balance sheet to balance and having to spend time on that, for example, rather than actually finishing it and answering the questions. I am going to present the 3 commandments, or the 3 most important points here, and then we'll go into them in a bit more detail, and I'll show you how to fix a very broken file and make it much better logistically. I am going to limit the scope here to 3 statement models because if we also included valuations, DCFs, M&A models, LBO models, we'd be here for hours talking about every single thing. So I'm going to focus on the top points here, and then maybe in a follow-up lesson or tutorial, we'll go into some of the other model types. The first commandment, the most important one, is to always list the income statement, balance sheet, and cash flow statement on the same tab or worksheet. We get a fair number of models that are set up like this, where the assumptions are on one tab, and then there's a separate tab for the income statement, a separate tab for the balance sheet, a separate tab for the cash flow statement. This is really bad because when you go in and edit something like this, it's very awkward because when you press Control left bracket, for example, to trace a formula, if it is spread over multiple tabs, you get one of the assumptions on the current tab, here, for example, for depreciation and amortization, but you don't actually see what it's linking to on the income statement tab. It does not jump you over there automatically. So you can't get to total revenue by doing that, and so it is very, very annoying and difficult to modify these formulas. Now, some people will say that you can solve this with macros, and certain macro packages do have workarounds, but we think it's a bad practice to do this because you never know what packages people are going to be using, and it's always best to make things work in the base version of Excel. The second commandment, do not mix drivers and assumptions with the historical and projected numbers. You always want to separate them. So let's go back to the bad model, and I'll illustrate this problem. I'll actually go over to the balance sheet. So what this person has done here is they have listed items like accounts receivable and inventory and prepaid expenses, for example, and they've listed the actual drivers right under the items on the balance sheet. And then if you look at the summation formula, they're not using a sum function. They're actually manually summing up all these line items and excluding the percentage drivers. This is bad because when you see an area like this, you will be tempted to just apply a sum function to everything, as you should. It's a reasonable way to do it, except you'll get the wrong results because now you're summing up these percentages and assumptions. So it is not good to do it like this. You really want to separate everything out, as we do in the fixed version, and have all of your drivers in one area. And then further down on the statements, you don't include the percentages here. Instead, you just include the calculations or the output here. And then the third commandment, you always want to simplify and consolidate the statements. Aim for about 5 items on each side in the balance sheet. And I would say the max should be around 10 in most cases, though there can be exceptions for some more complex companies in certain cases. If you look at this model and you compare it to Monster Beverages 10K, which is what this is based on, the person has made a very literal interpretation of the financial statements. For example, they've essentially taken everything in current liabilities, and then they've just input it into their version of the model here. I'll scroll down so you can see it. They have literally every single item that's in the 10K, but if you really think about it, it's kind of pointless because maybe two or three of these are significant: accounts payable and accrued liabilities. But then all these other items, deferred revenue is quite small and it should be grouped with long-term deferred revenue. Accrued compensation is small. Income taxes and payable are small. So a lot of these items could be grouped together into the same accrued liability or accrued expense line item. And then instead of having 4 separate drivers and assumptions, we just have one, and it would simplify everything. It would also reduce the number of links on the cash flow statement, which are excessive right now. Those are the 3 commandments. The Bible gives you 10 commandments, but I'm only giving you 3 here. So in theory, this should be easier to follow. If you want everything in writing and the images and the Excel files, you can go to this URL on screen, Financial Modeling Best Practices. I will link to this and pin it as the first comment below this video as well, so you can get everything there. I want to go into more detail on a few of these points and show you how to apply some fixes to this file. So I'm going to start by going back to the 3 commandments and just adding a little bit on each one. Then I will explain how to give your Excel files a makeover. I won't demonstrate the full process, but I will show you how to get started by fixing issues like the one in this file. And then we'll talk about some smaller issues and best practices. These are what I call the smaller or shorter commandments. They're not as important as the big 3 or top 3 commandments, but you still want to follow them as much as possible. So let's go into each of the 3 top points here in a little bit more detail. With this issue about the income statement, balance sheet, and cash flow statement being on a single tab, it's really what I just demonstrated before with the depreciation and amortization assumption. It is very cumbersome to go into a model like this and then to see something like stock-based compensation or deferred taxes and understand that part of it is coming from this tab, but then part of it is referencing this other tab because the control left bracket shortcut in Excel simply will not take you over to the other tab. And the control right bracket shortcut will only show you what this feeds into on this tab as well. So this is why it's a really bad idea to do this. We're not completely against separate tabs. Obviously, if a model gets to a certain complexity level, it's fine to have separate tabs for supporting schedules or maybe for some historical data, or maybe if you have more detailed revenue and expense drivers, but you don't want to spread the 3 financial statements themselves across separate tabs. The only real exception to this is if you're required to do so by your company or by a case study provider, for example. Now with this issue of separate assumptions, I showed you one of the issues before that it makes the summations really awkward because you'll be tempted to look at something like the cash flow statement and you'll just want to sum up everything here, but you will not get to the correct number because of all these annoying percentages in between, and you will get numbers that are always slightly off because of this. And if the assumptions are something other than a percentage, the numbers could be off by even more. So that's the major problem with this. Also, in general, it's really hard to look at a model like this and just see what's driving it in one spot. You sort of have to go through all the tabs and click around and look at a lot of different sources of information. And a lot of people, especially senior bankers, don't really like to do it. They would much prefer to have everything laid out up front in one area so they can see what is driving everything by looking at one spot in your file. Now, there are some exceptions. For example, if you're setting an item to $0 or 0%, or it's very small and you're forecasting it in a very simple way, such as holding it constant, for example, then it might be acceptable to mix the drivers and the projected numbers a little bit. But in general, for anything more complex than this, anything projected as a percentage of another item, it should really be in a separate area. And then the 3rd commandment about consolidation. So most line items on the statements are small and don't really matter that much. You want to consolidate long-term and short-term versions of debt, deferred revenue, and investments. You never want to show all the individual components of equity separately. So in this wrong model, for example, the person is wasting a lot of time by showing common stock, APIC, retained earnings, accumulated and other comprehensive loss, and treasury stock down here. It would be much better to simply have this one single line item for total equity and then to link everything to this instead. It saves a lot of time. You have to worry about one link rather than 5 links right now. And there's really no value add in showing them separately. If the company has preferred stock or non-controlling interest, yes, those can be separate, but those are separate items outside of common shareholders' equity anyway. One tip here is to group anything with similar sounding names. So prepaid anything, accrued anything. In the wrong model, for example, on the asset side, something like prepaid expenses and other current assets and prepaid income taxes, we would group together because they're both prepaid line items and they probably follow similar trends. On the other side, anything with accrued in the name, we would probably group together for similar reasons as well. And even something like the income taxes payable, we could throw in with that because it's really a similar idea. It's some type of simple timing difference between cash payment of a service or product and then the actual delivery or receipt of the service or product. Be very aggressive with the balance sheet and cash flow statement. The only thing you have to make sure of is that there's always a correspondence between the line items. So for example, in the fixed version of this model, if you look at something like other assets right here, we've consolidated a number of different line items on the asset side in this row. And the main point to be careful of is that if you look at the formula, we're linking to the old number and then we're subtracting deferred income taxes on the cash flow statement. It's very important that we maintain that. Even if this includes more than just deferred income taxes, we always want to have at least one link to the other statement. So each line on the balance sheet should have some correspondence on the cash flow statement. Each line on the cash flow statement should have some correspondence on the balance sheet. So let's go into part 2 and I'll explain more of this process and show you some examples of how to start giving your Excel files a makeover if you have to deal with something like this. I would probably start by cutting and pasting the income statement, balance sheet, and cash flow statement to the same tab as the assumptions and drivers, and then you can relink or delete the main tab name in the formulas. So this part is actually pretty easy. So let's go over and try this. I will go to the income statement tab first, and let's go over here. I'll take this entire income statement. Now, when you do this, it's really important to cut and paste it with Control X and Control V, not just copy and paste it, because you're not making a copy. You actually want to change where the model is hosted in your file. So I just did that. Let's go to the balance sheet tab, and I'm just using the mouse here because it's actually a little bit faster in this case because of the convoluted way in which this model is set up. Let's go down and cut and paste the balance sheet down there, and then let's take the cash flow statement and just grab everything here. And then we'll cut and paste this over to the same tab right here. So that just took about 30 seconds, and already this looks a lot better. It's much easier to trace the formulas. If we go in and look at something like depreciation and amortization right now, for example, if I press Control left bracket, we see the percentage link, and then if I press enter, it jumps us up to the top and we see the revenue right there. So we just spent about 30 seconds on this, and already the usability of this model has improved greatly. There are still some issues. For example, many of these formulas, if you look at them, are using unnecessary spreadsheet names. We don't need to have this name MNST now that everything is on the same tab. So we could do a find and replace to fix something like that. But the point is now it's actually in usable shape. For step 2, I would sort of combine these two, and I would start removing the inline assumptions and also consolidating the balance sheet and cash flow statement aggressively. We've done a fairly good job of that in the finished version, but you could go even further. So let me show you an example of what you might do for this. Let's go down to the current liabilities down here. So looking at something like this, what I would probably do is insert a few rows here. I would take the deferred revenue and put it down near current or near non-current liabilities because we're going to consolidate both types of deferred revenue. And then for the rest of these, I would probably create a line item such as accrued liabilities and other items or other payables or something like that. I would then add up all these line items, all 4 of them. So we have that. Let's fix up the formatting a little bit and do a copy and paste as values. So we have that. And then I would make this a percent of operating expenses. Once we have that, I would then go in and just delete all of these right now. Now, we need to change some of the setup and links here. So I would change the total current liabilities to instead reference accounts payable and then accrued liabilities and other items. Copy this across. I would take this percent of operating expenses line right here, and then I would create an additional row up here at the top under revenue drivers for this line item. And I'll do a Control X to cut it, and then I will paste it right up here, and I'll call this one accrued liabilities as a percent of OPEX, and I'll do a copy and paste of the formatting. And then let's go down and take this number, and then we'll divide by the operating expenses on the income statement. And so we have that. And now we can go in and create a forecast here. This saves us time in the long run because now we have one single assumption. It's separated out. And instead of having 4 different line items for it on the balance sheet, now we just have one, and it's much easier to forecast this as well. Now, obviously, going through the whole process here is probably going to take about an hour or so if you do this for everything. So I'm not going to demonstrate this all on screen. But again, you can look at the finished model here and see exactly how we set this up. So you have to go through that process, and this is probably the most time-consuming part, but this is what I would do next. Once you've done that, then you want to look at anything that isn't directly linked and separate some of those assumptions at the top and create a new area for them as well, or add some extra rows. So in this case, for example, if we look at the income statement, something like the operating expenses as a percent of revenue, this is not catastrophic to make this a percent of revenue directly on the income statement, but it would be better to add it to this area right up here at the top. And same for cost of sales as a percent of revenue. So we would want to take these items and put them up here and say something like cost of sales as a percent of revenue. We have that. And already just by doing that, it's easier to interpret the model because now we're putting some of these drivers where they actually belong up here at the top. And I could call this one OPEX as a percent of revenue as well. And now we have that. And now we can delete some of the extra rows here. And so I would start going through that process. Again, it's going to take some time to move around everything, but that's the basic idea here. Once you've done all that, then you want to apply some polish, check the formatting, and verify that the numbers roughly match up. So for example, in our fixed model here, we want to look at the total revenue, about 13.2 billion by the end, the cash balance, about 2.5 or 2.6 billion, and then we can also look at items like what the debt balance comes out to and what the equity balance is, about 10.3 billion for the equity balance. And then if we look at the long-term debt balance, it's about 174 million. Now, if we compare these to the original broken version of this model, revenue is pretty close. We do have some ref errors here, so we can't tell entirely, but you'd want to go through this and look at all these different line items and see what they come out to. Again, it's not going to work in this case because I've started modifying this model already, but you'd want to do something like that and do a quick check of your numbers and look at the cash number in the fixed version versus the old version, the revenue, the EBITDA, and so on and so forth. Beyond what I just showed you, there are also some smaller issues and some best practices to apply here as well. I'm not going to do as much of an Excel demonstration for these. If you want the full list, go take a look at the knowledge base article that I've pinned below this video. I'm just going to cover some of the highlights here. Color coding is very important. And actually, the color coding, even in the broken version of the model, was not that bad because, for example, at least we are using blue for the hard-coded historical numbers and black for the projections. So in that sense, it's not terrible. But one weakness here is that when you project something like inventory as a percent of the cost of sales, you don't really want to use blue for both the hard-coded historical numbers and for the projections. What you want to do instead is, for your projections, based on your assumptions, you should really use some type of input box formatting to set it apart from everything else. So here we're using the yellow input box formatting with a blue font color to indicate that it is hard-coded, but the yellow box means that it's our number, our assumption, rather than something from the company's historical statements. We have a whole tutorial on color coding and a way to automate it, so I'll refer you to that here as well. Sign conventions are important. Another weakness with the initial version of this model is that if you look at the income statement, we're following the company's convention and listing the expenses here as they do. And then to calculate gross profit, we take revenue and subtract cost of sales. We take gross profit and subtract operating expenses to get to operating income. But this is not really ideal because it makes it difficult to sum up each area. You have to remember whether you add or subtract the line items. What you want to do instead in most cases is list everything with the correct sign so that this way you just add everything. If it's negative, you list it with a negative sign. If it's an expense or cash outflow, you list it with a negative sign. So then you just add up everything. You can also apply this to things like the pre-tax income and income taxes. It just makes it much easier to sum up everything and check your work as you go along. You don't want to hard code projected numbers. This could create serious issues if anything ever changes. So as an example of this one, let's go back to the broken version of the model right here. What I mean by hard coding projections is that for something like goodwill on the balance sheet, you can see here that we're simply linking to the historical goodwill and then just copying it all the way across. This is not good because it means that if something ever changes in the model with the goodwill or other assumptions, the balance sheet could go out of balance. So what you want to do instead is create some type of line item on the cash flow statement or link the goodwill to something on the cash flow statement, like the impairment of goodwill and other intangibles, and make it flow in directly so that nothing in the forecast is actually held constant. Everything should be reactive and it should change based on what is going on the other statement. Avoid hidden sheets, hidden rows, hidden columns. it's just very dangerous. It's very easy to make mistakes, to accidentally leave in data. I would actually go to any model and right-click the tab and then go to hide. You can't really see it because of how the screen is positioned here, but if you right-click any tab and you go to hide and unhide, if there's something there for unhide, you want to get rid of anything that's hidden, and the same for hidden rows and columns. Avoid hard-coded numbers and formulas and cell references. You can have numbers like -1 and 0 and 1 and maybe 12 for the months in the year, but you don't want to have 137 or 63 or something like that mixed in with references to formulas and cell references. Never link to external files. If you have to do this initially, you can, but you want to copy and paste everything as values and create a separate tab or a separate area in your sheet. External file links are always prone to break. Linking to multiple other sheets in a single formula is also a bad idea. It won't break the model, but as I showed you before, it just makes formulas more difficult to trace. You can use other features in Excel sparingly: named cells and ranges, ifs and nested if statements, custom number formats, circular references. We have tutorials on a couple of these, or at least on the circular reference one, so I'll refer you to that. The short version is that these features are not going to break your model, and they don't mean that you're doing something wrong, but you need to be careful because if you overuse them, the model can become quite difficult to read, interpret, and modify. Just as one simple example here, if you go to Control F3, we do have a few named cells for the company name and the last historical year, but we're using them very sparingly. We really just have those and then something for the print area. We're not using named cells for the case sales or the market size or the market share or anything like that. Those are all inappropriate because they change each year. You want to use named cells for things like this that are going to stay the same each year, or that are defined once in a model and then might change over time, but are going to stay the same as you go over the different periods in your model. So that's about it. Let's do a quick recap and summary. The 3 commandments of financial modeling best practices. Always list the income statement, balance sheet, and cash flow statement on the same tab. Do not mix drivers and assumptions with the historical and projected numbers. Always separate them. And then consolidate and simplify the statements aggressively. Aim for 5 to 10 items on each side of the balance sheet. I showed you an example of how to give your Excel files a makeover, and I didn't finish it here because it takes a long time, but I think I gave you an idea of how you can cut and paste the statements from different tabs onto the same tab, do a find and replace, and then start rearranging the formulas to fix this. And then smaller issues and best practices. We talked about a number of things here. Color coding is quite important. Sign conventions are important. Maybe not critical, but they save you time and make it easier to check files. We talked about things like avoiding hidden sheets, about why you should not just hard code or keep constant a number like goodwill when you have a projection like this. You can use some features like named cells, circular references, complex nested if statements sparingly, but you shouldn't go overboard with them or your file will be very difficult to use. That's about it for this lesson. Hopefully now you know a little bit more about model setup and logistics and how to do it successfully so you can create your own forecasts.